One of the best things Bitcoin can do in this market is decouple from our traditional finance markets. And I'm going to be covering with you, if we've done that yet, what that means, if we haven't done it yet, what we could be looking at, and most importantly, how that could affect the price of Bitcoin. Because the key thing, in my opinion, that we need in this market is to have a Bitcoin that is decoupled from traditional finance, because it removes dependencies on traditional finance. Bitcoin was meant to be a hedge. That's what it was made for after the '08 crisis. And I think that we could be onto something pretty interesting here. So before we get into any of this video's topic, what we need to first really just get out of the way is, what does decoupling even mean? Like, why is that significant? I'm gonna make this super simple for you guys. Decoupling is literally just losing the link, losing the correlation between one market and another. And in this case, we're talking about things like Bitcoin and the S&P 500, Bitcoin and the NASDAQ index. These are indices that are major, where generally what we would see is that if these indices rise up on a given day, Bitcoin would probably rise up as well. But if they rise up by a lot, Bitcoin would probably also rise up by a lot, and vice versa. If we swap it around, if they drop, Bitcoin drops as well. And this is actually a concept that we've been covering on this YouTube channel for a really long time. If you've been subscribed for a while, you're going to know that I even made a video specifically talking about Bitcoin's lack of volatility on weekends, on Saturdays, on Sundays, doesn't matter. And this is a really strong display of how Bitcoin is kind of trapped, or at least was kind of trapped by what happens in traditional finance. And the reason that that's important is because if we're very closely tied to, traditional finance, that has a few benefits, and we're going to go through them in this video, but it has a lot of drawbacks. And the main drawback is that we can't really we just can't really expect Bitcoin to outshine traditional finance, right? If Bitcoin needs the blessing of traditional finance markets to rise up, then we're not going to rise up without that blessing. And that's a problem, because if we're expecting a $100,000 Bitcoin, or a $500,000 Bitcoin, or $1 million Bitcoin, or a $10,000 Ethereum token, we need some level of decoupling, unless you also think that, indices like the S&P 500 are going to reach ridiculously high levels of being like 10 times what they're worth right now, right? It just kind of doesn't work. And the reason that this even exists in the first place is because Bitcoin has kind of just been lumped together with tech stocks, or just things that are generally very risky, and so on. And a big part of that is because people in the Bitcoin space just do not understand what Bitcoin is, but we can't really do anything about that right now, at least not as traders like you and I. But what's really, really important to understand is that if we do see dollars, euros, whatever, flowing out of currency and into assets, that's generally when we see the risk appetite for people increasing for things like Bitcoin. And the reason that's important is, again, like I said, if we've got an economy where people don't really want to invest their money and so on and so forth, then we're not going to be able to reasonably expect that money to go into indices. If they don't go into indices, we can't reasonably expect them to go into whatever stocks, which is what make up indices. We can't reasonably expect just money to be injected into things that we want it to be injected into, and that also means that we can't reasonably expect risk appetites for Bitcoin investment to be particularly high as well. And that's why it's really important, because right now it's almost like we're our life is in the hands of traditional finance, and if traditional finance doesn't give us what we want, we're dead. I mean, and we know this. It's pretty hard to deny. If you look at the charts over the last months and years, it's been very clear. In fact, I'll show you a brilliant example right now on my chart, where if we go ahead and take a look at the S&P 500 and when the S&P 500 actually topped out, it's very, very clear. Look at this. End of 2021, very beginning of 2022. If we now take a look at Bitcoin's chart at the very same time, end of 2021, beginning of 2022, Bitcoin was a little bit early, about 1 month early to doing this, but we did see that Bitcoin's major all-time high coincided right when the S&P 500 also topped out. And it's no coincidence. This is extremely clear, obvious analysis once you actually understand what's going on. And it means that we've got to start asking the right questions and understanding what this sort of diversification could mean if we lose that correlation, because there is evidence to suggest that we might lose that we might be losing that correlation right now. And I'm going to cover that later on in this video. If you're excited for it, do me a favor and smash up the likes. And as we're going on, guys, I want to highlight to you that OKX, one of the companies that I'm working with, is offering you up to 30k in rewards. If you're a trader like me, you take it seriously where you put your money, you want it to be in a secure place. It is absolutely essential to go with an exchange that's been around for a long time. OKX has been around for 6 years, no drama, go search it up. I couldn't find any dirt on them, very, very impressive. And if you want to use their platform and gain access to rewards of up to 30k basically for free, then follow my link in the description down below. But I don't want to waste any more of your time. Let's actually just jump straight into this stuff, because you know, what's interesting is that if we do lose that correlation, it could make Bitcoin a little bit more of an attractive you know, investment. Ultimately, we know why Bitcoin was made, right? Again, to hedge against, you know, the crises of the 08 financial crisis and so on. And you know, one of the big things is, you know, was for Bitcoin to behave as a hedge against the mainstream financial system, right? And if we lose that decoupling, that kind of bolsters the argument for Bitcoin. So far, we've actually really very clearly come towards a correlation over the years, you know, with conventional markets and Bitcoin, and that completely wipes out without any doubt. And you know, I'm a Bitcoin maxi just as much as the next guy, right? I mean, I fucking eat, sleep, breathe shit Bitcoin my whole life ever since I started, you know, heading down this path 6 years ago. It's been my entire life, but I'm still not deluded enough to ignore the fucking fact that Bitcoin's original things that it was set out to achieve have failed. Bitcoin isn't really used as a means of transaction, isn't really generally used as a store of value. It isn't really used at all as a currency, which kind of relates to number one. Store of value, you could definitely argue, but let's be honest, guys, most people are only in Bitcoin in order to make money. You know, if I told you right now that for the rest of your life you can only use Bitcoin as a currency or to store your value in it, most of you wouldn't be interested, because you'd lose the speculative you know, investment side of this, where you could, you know, blow up your account, right, and really make a lot of money. You know, and that's a really important thing to keep in mind, because now that we've kind of acknowledged that we've lost, you know, we failed at Bitcoin's original, you know, set out priorities, things that Bitcoin was created to tackle, you know, it makes a lot of sense why we even have a correlation in the first place. You know, if we've already failed at all of those things, then Bitcoin just kind of, like I said earlier in this video, just gets lumped again with all the other tech stocks, you know, that may or may not be particularly well understood by investors. And what's really important to keep in mind is that now that Bitcoin is really big, right, it's not super tiny anymore. It's still, it is fairly large. I'm not saying it can't get, you know, 10, 100 times larger. It certainly can. But now that Bitcoin is where it is in terms of its size, it needs big amounts of money to move it, right? I mean, you know, you and I that have, you know, read books like The Bitcoin Standard, if you haven't already, definitely check it out, or have just studied the philosophy and the politics and the beauty of what Bitcoin is, we're gonna get it, right? But it's not really up to us to move the market anymore. You need really big, deep pockets to get into Bitcoin, and these guys are only gonna get into Bitcoin. I mean, they don't give a fuck about, you know, the peer-to-peer, you know, means of transaction that Bitcoin is. They're only gonna get inside if it kind of makes financial sense from a speculative point of view. And that, I think, is something really important to keep in mind, because again, if we've got that decoupling starting to take place, then actually Bitcoin as a standalone option definitely starts to become a little bit more interesting, and it could lead to increased demand for Bitcoin, potentially, obviously, giving us higher prices. Now, on the other hand, what kind of, you know, is the flip side to this, and why it's not actually so nice, is that it could make Bitcoin a little bit less integrated into the mainstream financial systems. Again, you know, the flip side of this is that if Bitcoin stands on its own, you know, then if the S&P 500 starts pumping up and Bitcoin's on its own, Bitcoin's just gonna, you know, it's gonna be left behind. And I don't really think that's a problem, because overall, you know, I would expect Bitcoin to generally outperform the S&P 500 anyway. So if anything, I want more of a decoupling. But I think it's something to keep in mind. It basically just makes Bitcoin a little bit riskier. You know, and like I said earlier, there's a good amount of evidence to suggest in the first place that we are actually, you know, heading towards this decoupling already. You know, the best examples of it are actually to do with Bitcoin's most recent, you know, bits of price action right here. I just want to go through this with you before I get back to the theory of this video. We're kind of jumping back and forth. Throw up a like on this video and tell me in the comments if you like this kind of content. It helps me plan out what to do in the future. But if we go ahead and look at some of the price action that we've actually been able to produce on this chart, and then actually just throw on the S&P 500 on top of this, you know, we started seeing something really interesting, guys. You know, I mean, look at this. This is quite beautiful, quite remarkable in my opinion. You know, and by the way, I think that, you know, we need to clear some stuff up, because, you know, a lot of people are talking about this right now and how, you know, like I said, there is this decoupling. That's why I'm making the video. But I also just want to point out to you guys, I want to make sure that we're all kind of just grounded and not, you know, floating too high, too close to the sun or whatever. You know, one of the key things that happened here that has really, you know, kind of caused a lot of people's attention is for example, like around here, you know, the S&P 500 kind of starts rising up, Bitcoin gets left behind, but then on this occasion right here, S&P 500 levels off, Bitcoin absolutely blows up. Bitcoin absolutely blows up while the S&P 500 is leveling off. And then when the S&P 500 starts to dip really hard, Bitcoin just kind of holds its level and performs really well. And these are really good examples of how Bitcoin has, in recent days, basically outperformed the S&P 500. It goes a little bit deeper than this. There's more that you can see if you zoom out further, and this is actually what I want to draw your attention over to, because, you know, the fact that Bitcoin had this crash in the first place is, I think, a big reason that we're kind of seeing this decoupling right now. You see, when Bitcoin was up here with the FTX crash of November 2022, one of the key things you're going to remember me talking about on this YouTube channel, if you were subscribed back then, is that Bitcoin had a really good setup to rise up. I mean, from a technical perspective, Bitcoin was in a very strong position. Just go back to my videos and you'll know what I mean. There was absolutely no way you can predict something like FTX crashing. Obviously, we all know that. This was very much, dare I say, a black swan event. I don't like using that phrase particularly freely, but it definitely, you know, fit a lot of the criteria for what a black swan event even looks like. And I think that's absolutely critical to keep in mind, because at that point, guys, if you look at the S&P 500, it rallied up really nicely, but Bitcoin absolutely shit the bed and it fell down to $15,000, $16,000, $17,000, while the S&P 500 was actually performing very well. And then when the S&P 500 dumped quite harshly, so did Bitcoin. This is really important to keep in mind, because that essentially means, now that we know that this has been flushed out, because we're so much higher than that FTX high, and by the way, this was very obvious. If you're watching this YouTube channel, you're going to know that we were talking about this for a very long time. I was very certain about it. You know, definitely do me a favor and smash up the likes. Make sure you're subscribed as well, that you got the bell icon checked as well. If you found that analysis useful, I would really, really appreciate it. One of the things I was saying is that, you know, once we kind of get over the hangover, so to speak, of this FTX drama, you know, the market kind of returns back to where it wanted to be in the first place. And I think that's a big reason that we're potentially seeing a little bit of this decoupling right now. You know, Bitcoin decoupled from the S&P 500 on this drop as well, but it decoupled in the other way. And we don't like talking about that direction because it means we make less money, but it's still decoupling nonetheless. And now I almost just see it as an, you know, an elastic band where we stretched it out too far in one direction, so it's just, you know, just smashing back in the other direction right now, which kind of means, and I know you're not gonna like this, guys. I already know you're moving, you're hovering your mouse over that dislike button right now. It kind of, to me, means that this isn't really worth reading into that much yet. You know, Bitcoin is still bound by its range. It hasn't broken above 25K. You know, I just feel like, I mean, look, we've got the right starting pieces, right? If this does actually turn into something, we're doing the right thing at the beginning. But there's still, in my opinion, quite a long way for Bitcoin to go to essentially prove to me that this decoupling is going to last. Because another thing that people really don't like paying attention to at times like this, and it blows my mind because it's like having a goldfish memory, is that Bitcoin has had many examples of decoupling from traditional finance in the past, and they tend to be quite short-lived. You know, one of the big implications of Bitcoin being decoupled from traditional finance is also that if the dollar starts gaining strength, Bitcoin would probably stop falling. But on the flip side, if the dollar keeps falling, Bitcoin would probably you know, not necessarily continue to rise. And again, like when we consider the flip side of all of these dynamics, you know, you really start to question, have we actually decoupled, which is what everyone in their nan wants you to think, or is this just yet another anomaly, one of, I don't know, hundreds that we've produced over the last basically year or two, potentially. I don't know the actual numbers. It could be way more or way less. Is it one of those, or are we actually looking at, you know, like we're onto something? And you know, I don't know the answer to that. What I do know is that it's literally only been over the last weeks, max, if we're being generous, or up to November if you want to include that. So literally like the last 4 months that Bitcoin has somewhat lost its correlation with the S&P 500. We're still more or less going in the same direction though, and let's not beat around the bush about that. You know, let's not forget reality. We're still more or less moving in the same way, even if it looks like we're getting decoupled. And you know, the other side of that as well, does that mean we've decoupled, or does that just mean that Bitcoin right now looks a little bit stronger? You know, where the S&P 500 might rise up by 1%, Bitcoin gains 6%, for example. It's still pretty correlated. It's just that the ratios are a bit different. But that's always been the case, right? It's never really been that the S&P 500 moves up by 1%, so Bitcoin moves up by 1% as well. That's a very, you know, that's a different correlation relationship. What we're talking about here is just more simply, if one market is up, the other one is up as well. If one market is up a lot, the other one is up a lot, right? Just to basically dumb it down and bring it down to like 5th grade English. I think that's a really important thing to keep in mind, because again, you know, what I like to bring to this, you know, YouTube channel and hopefully to you guys into your living rooms or cars or wherever you're watching and listening to this is a very grounded, healthy, realistic perspective on the markets. You know, I want to believe the hype just as much as the next guy because it's fun, but at the end of the day, I care more about raising my bank balance, raising my Bitcoin balance, you know, and stacking those Satoshis, right? And that actually leads me on to something else, which is actually quite cool if Bitcoin does decouple, which is that it could actually have a really big impact on the altcoin market. It could lead to just broader changes in the cryptocurrency market. And specifically, it could mean that if Bitcoin pumps more, that if Bitcoin pumps, altcoins could pump more as well, which just kind of overall brings us a little bit more volatility. It's similar to what I covered earlier on in the video, and that's even more great news for us, right? I mean, I've been sharing basically all of my trades for the last couple of years inside of 𝐷𝗫𝐹ly's VIP, which you can join and, you know, continue to watch how I'm ripping trades in this market in real time. The steps are down in the description below. But the reason that's really cool is if we have more volatility in the markets and we're a little bit more decoupled, we can start to analyze Bitcoin and cryptocurrency coins as their own asset class. You know, right now, one of the things that, I mean, don't get me wrong, I love what I'm doing, but one of the things that makes what I'm doing kind of annoying is that I can't sit down and be like, all right, what is Bitcoin doing today? And that's it. And that's the only thing I look at. You know, I certainly could, but I don't think that would be particularly responsible or even accurate technical analysis. A huge part of my job now is, what is the dollar doing? What is the S&P 500 doing? What do the inflation numbers look like? You know, how are the interest rates and so on? Like my job has become more of an economist, you know, than just a trader. And that's not by choice. You know, it's not like I decided that I just want to fucking inconvenience myself a little bit more than I used to. It's necessary, you know, like Bitcoin is bound by these factors right now, and unless that changes, we're gonna have to keep looking at Bitcoin by first studying these macroeconomic factors. Now, don't get me wrong, I'm not trying to complain about, you know, like, oh my god, I have to do more work. That's not what this is about. But what it does mean is that if we do get that decoupling, we can then analyze Bitcoin almost in a vacuum. You know, Bitcoin just kind of behaves the way it behaves and nothing else matters. I'll give you a great example is we still actually see this happening with altcoins sometimes. Now, generally, all the shit coins are going to pump up massively roughly around the same time, which is late phase of a bull market. We've seen this with all the shit coins. We saw it with the NFT craze as well. It's very, very common. NFTs are just another form of shit coin. Basically, at the end of the day, it's just rewrapped in a nice fancy skin, but it's still the exact same fucking model of launching a scam. Same thing from top to bottom, to be honest with you guys. It's just got a different name. You know, so we see them in the later stages, but what we see with other coins that kind of blow up during times like right now is that they almost kind of like have an environment of their own. You know, it doesn't matter to some extent what Bitcoin does. You know, for example, these altcoins are still able to rise up. And, you know, the big thing that we see this with are the really, really small coins, the coins that are just extremely risky, not even worth the risk, in my opinion, because, you know, they look really romantic when they're up 80% in one day. But, you know, the ugly side of it that you don't see is that in order to get that 80% pump, you probably would have had to invest in, you know, I don't know, I was going to say 500, maybe that's too many. You'd probably have to invest in like 25 5 other shitty coins that just don't take off, and they end up going down by 90%, and then one of your investments nearly doubles, you know, in a day, and you get kind of happy with that, right? Like that's what ends up happening to people that go into altcoins. There are exceptions, don't get me wrong. A lot of the time you need insider information. Don't shoot the messenger. I'm just telling you guys the facts. There are some winners. There are some winners who don't even have insider information, right? Who just generally do quite well like that. But the vast majority of people basically in every form of trading will not be successful, and not least even in the altcoin trading space. That's actually why I like my trading style of you know, kind of very direct, basically leverage trading. It's obviously not the safest thing you could do. You know, there are a lot of ways you could screw yourself over, but it's, in my opinion, the most direct way to influence your results other than just trading spot. But obviously spot is a little bit too slow. Spot just means normal buying and selling. Guys, what I'm doing on OKX, I've actually started to trade on OKX, is I'm actually, I'm ripping my derivative trades on here. You know, it's been Bybit for a very long time. It's going to stay Bybit as well. Obviously, love these guys. But OKX is another phenomenal exchange that I want to highlight to you, because like Bybit's 30K offer, guys, like I mentioned earlier, you know, OKX is also running a 30K offer, but this one, you know, you can get very easily, you know, just by registering an account on OKX using my link in the description. Bam, you're going to get up to 10K in an OKX mystery box. If you deposit $50, you boost that up by another 10K, and if you start trading, you can boost that up to 30K in total of potential rewards when you sign up to OKX using my link in the description down below. And this is a platform that you can do everything on. You can buy crypto with your card. You can they have some really cool data, by the way, like long short ratio data, so when they have copy trading features, lots of cool shit going on this platform that are well worth checking out. You know, I want to highlight to you guys that there is a little bit of a quiz before you can access the derivatives trading stuff, which is where I live, but that quiz is not something you need to worry about. Just give it your best shot, you'll be okay, and obviously just make sure that you know what you're doing. There's always a link to a tutorial where I teach you how to trade from A to Z, basically as a beginner. It's always linked in my pinned comment, which you can find down below the like button. But these are huge opportunities that we're looking at in this market right now. And, you know, if we do end up decoupling, you know, we're going to have a lot of amazing volatility. And the good news is that even if we don't, even if we're not quite there yet, and to be honest, guys, I don't think we are there yet. You know, I think that anything we're seeing right now is mainly just going to be transient. I think it's not going to stick around. I think we're probably going to end up falling into, you know, some sort of average again, where we just kind of more or less do correlate with indices. And it breaks my heart to say, obviously, because I am a Bitcoin maxi, but again, I'm not someone that just ignores reality at the very same time, you know. So for now, I don't actually think that we have decoupled. Like I said, there are a lot of anomalies. Yeah, this hasn't lasted particularly long. It has been a few months, yes, but that's not a huge deal, and we haven't even broken ranges like 25K yet, you know. So if Bitcoin does get a major breakout above 25, it reaches up to a level like 30, then that's a really significant breakout, because that basically means we've broken out of an entire range. If that happens and the S&P 500 doesn't, for example, get up to here or up to here, like especially if it doesn't get up to here, then I'm gonna say, yeah, you know what, it looks like Bitcoin actually has left the S&P 500 behind. But for now, the S&P 500 is in a small pullback, while Bitcoin pumped up quite nicely, but nothing absolutely insane. And it's very possible, we don't know this yet, obviously we'll find out within 16 hours, but it's very possible that when this next trading session opens on Tuesday, that we do actually see a stronger S&P 500, an S&P 500 that actually kind of catches up to the gains that Bitcoin was able to enjoy while the S&P 500 was closed. And obviously the dollar has been on a little bit of a drop down anyway. So if this thing wakes up, that could be a problem for Bitcoin and the S&P 500. We'll just have to wait and see how that goes. For now, like I said, that hasn't really had a bearing on the market, and that's why a lot of people are getting very excited about the possibility of a decoupling with this market right now. But of course, that doesn't actually mean that that's what we're looking at yet. You know, we need to just evaluate what's going on a little bit more as time goes on, and that's why I'm just kind of saying, like, look, it's not the most worrying thing, but you know, as I was saying with regards to the trading opportunities, I mean, look, at the end of the day, even if we stay correlated, even if we don't necessarily massively decouple or stay decoupled for a long time, we've still got a lot of amazing trading opportunities. I mean, there's no way to lose right now, which is the best part. I mean, the bottom line is that we have volatility, and that makes it a great time to be in these markets. And that's why I'm really excited to be able to put forward the offers that, you know, companies like OKX are giving you guys. You know, if you combine Bybit, OKX, and PrimeXBT, the three exchanges that I'm using primarily in these markets right now, you're going to be getting up to $67,000 in bonuses, which is absolutely ridiculous. I mean, you know, the things you could do with that, you know, I can't fucking do it, so I don't even want to think about it. But definitely worth checking out, especially with, like I said, OKX's bonuses not even requiring necessarily huge minimum deposits and so on. You know, you can get a lot of what they're offering you, you know, with up to 30K in bonuses and rewards, you know, by basically doing nothing, and that's very, very impressive. You know, with Bybit, you have minimum deposits you need to make, minimum trading that you need to do in order to qualify for those bonuses, but they're very direct bonuses. They benefit you hugely. They're literally giving you free cash. OKX, it's a combination of a bunch of different stuff. It's almost like rolling a dice, and the dice roll costs you nothing. So very, very cool indeed. Worth checking out. I really hope you enjoyed this one. A very different one to what I do normally. Obviously, I'm traveling right now as well, so I don't have the best setup in the world, but let me know what you think. I am a little bit like self-conscious about it. I feel like it doesn't look the best, but anyway, I'm working with what I have. I want to know what you guys think about this format of video. If you want to see more, if you have any particular video topics you want to suggest, let me know as well. Something that you've been thinking about, that you've been wondering, that you think might be useful for me to cover on this YouTube channel. And then, of course, yeah, just like what's going on with the camera and the microphone and everything as well. Always do appreciate your feedback. Thank you all very much. You know exactly what to do. Hit up the likes, subscribe, tick the bell, and I'll see you all in the next one. Cheers.